Volatility is back. In this video, I'm going to cover how to use volume profile paired with higher volatility to make money day trading. Now, I will say the last couple days, volatility has been down as we've been kind of trying to grind toward the upside. However, it just happened that as we got toward that upside portion that we were struggling to break through, some news broke out. And these kind of moments is what you want to take advantage of as traders. It aligned perfectly. We're at a Friday. The market does not like uncertainty, especially on a Friday, so you expect some liquidation. I paired that natural reaction with these key high volume nodes to look for a short opportunity. So I took 5 Nasdaq contract shorts as we held below that 21,750 level. It's been a key level, as well as the higher volume node at 21,760. So essentially, if we break over the high of this candle, I'm stopped out and my trade is invalidated. However, you can see sellers really started to step up here and take over. And as always, this is another break and retest. So we're breaking below that previous area that we were holding as support. And typically the market will come back up and retest that zone, and that will be a new level for a rejection. However, if we do retest that and get back above it, the short is no longer valid. But as you can see here, as soon as we really start to push away from that level, I start to trail my stop and the sellers get really aggressive. And you can determine the strength of sellers by how fast the candle moves, as well as how quickly the CVD goes negative. And you'll see we get that quick drop, and as soon as we get right to that VWAP level, I'm watching to see if any buyers start to step up. There was definitely some wicks, so I just took my profit, locking in right around $3,600. And as always, you're never going to catch 100% of the move, but as you can see right in this area, that 21,700, we get a huge bounce, and that is another high volume node. So if you pay attention to these high volume nodes, you'll be able to start to see where price is most likely to bounce from or reject from. And it kind of plays out to the upside and to the downside always. Typically what you'll see is the stop out wicks on the way down, they end up rejecting a high volume node. Now, I don't think that's just a coincidence. I don't know if that's algorithms or what, but as soon as you see a high volume node get ran through and then you see price immediately drop back below it, I think that's a really good opportunity to take the short with a stop right above it. So as always, if you got anything from this video, make sure you like and follow for more.